There are many ways to build wealth and earn money, but did you know that one of them is by using assets? So, get ready to discover the smartest ways to let your money work for you. Because they say money won't grow itself, but with assets and a great strategy on how to manage it, you will earn more money than you could ever think of. However, wealthy individuals are well aware of numerous potential methods to generate income. One of the best-kept secrets of the affluent is their ability to create and acquire high-quality assets. Welcome to Nova Society, the world's best finance channel for personal finance. If you are interested in this kind of video content, then this is the perfect channel for you. Make sure to like this video, click the subscribe button, and turn on the notification bell to keep you updated on our recent uploads. Growth shares. Partial ownership of a company through shares turns shareholders into part owners. Shareholders are entitled to a portion of the company's profits and earnings growth. Shares can be traded publicly in the stock market, for example Apple, Tesla, Amazon, Google, or issued by private companies like local supermarkets. Companies issue shares on the stock market to raise funds for growth instead of relying on credit or financing. Here's how it works. When a company performs well and wants to expand, it may conduct an initial public offering, IPO, by issuing shares in the stock market. For instance, if a company's value is $1 million and 100,000 shares have been issued, the price per share is $10. If someone, like Emma, invests $100,000 to buy 10,000 shares, 10% ownership, and over time, the share value grows to $100, Emma's initial investment of $100,000 turns into $1 million after 10 years. Warren Buffett is a famous example of someone who made money with growth shares. He invested in companies like Coca-Cola, American Express, and IBM, allowing their value to grow over time, making him one of the most successful investors. The price of shares fluctuates based on supply and demand. Shares with dividends. Shares with dividends are among the most profitable investments, providing periodic payments to shareholders usually every quarter. These payments, known as dividends, represent a portion of the company's profits. For example, consider a stable company like Gadget that pays dividends to its shareholders, resulting in moderate growth compared to shares focused on rapid expansion. If Gadget's stock price is $100 and they pay a $7 dividend per share for the year, the return on investment is 7%. For instance, if William owns 10,000 shares, he will receive $70,000 in dividends annually, distributed in 4 payments of $17,500 every 3 months. This provides him with a steady income while retaining ownership in the company, which still has the potential for further price growth. Dividend-paying shares are a preferred form of passive income, as the invested money works on its own, freeing up time for other investment opportunities and personal pursuits. Index mutual fund. The American stock market offers an average annual return of 8 to 10%, significantly higher than what most banks provide, around 1%. To achieve this return without buying all individual shares, you can invest in indexed funds, which pool money from multiple investors and replicate the performance of a specific index, like the S&P 500 or Dow Jones Industrial Average. These funds provide broader asset exposure with lower fees. Other well-known indices include the Nasdaq, tech giants, FTSE 100, England's main stock market index, and Nikkei 225, Tokyo Stock Exchange. Exchange-traded funds, ETFs, also act like stocks and track various assets like industries, bonds, and commodities, for example gold, silver, oil, and Bitcoin. Renewable energy companies and alternative energies are expected to be profitable in the next decade. Investing in a fund that focuses on the sector reduces risk and commissions compared to buying individual shares. The advantage of index funds is their low rates and commissions, making them a passive investment requiring minimal time. One famous person who succeeded with index funds is John C. Bogle, founder of Vanguard Group, known for creating the first index mutual fund. His philosophy of low-cost index funds has been widely embraced, and Vanguard's funds have become popular worldwide. Bogle's long-term approach led him to become a billionaire through these investments. Active mutual funds. Effective investment strategies can be quite simple when executed correctly. John Bogle is widely recognized as a pioneer of index investing, and his legacy continues to inspire countless investors worldwide. Another avenue for potential profits lies in active funds within mutual funds. These funds are managed by a fund manager who makes investment decisions on behalf of the investors. The goal of active fund managers is to outperform the market by selecting individual investments they believe will perform better than the market average. In active mutual funds, the fund manager uses their expertise in research to analyze investment options and choose those with high potential for returns. However, active mutual funds tend to be more expensive than passive funds like index funds or ETFs due to higher management fees and trading costs. The fund manager's frequent buying and selling to maximize returns can contribute to higher risk levels. While active mutual funds offer the potential for higher returns, they also come with a higher level of risk. The fund manager's choices may not always lead to outperformance, so investors should carefully consider the benefits and risks before investing in them. Bitcoin. The next asset that has the potential to generate wealth is Bitcoin and other cryptocurrencies. Bitcoin, in particular, has gained popularity due to its scarcity and potential for long-term wealth generation. It was introduced in 2009 as the first digital currency. The total number of Bitcoins to be released worldwide depends on factors like mining difficulty, new block creation rate, and Bitcoin adoption. Unlike traditional currencies like the dollar, pound, euro, or yen, which governments and banks can print in unlimited quantities, Bitcoin has a limited supply of 21.4 million coins, making it appealing as a store of value. The price of Bitcoin has been volatile, influenced by the current financial situation and demand on cryptocurrency exchanges. Despite this, experts believe Bitcoin will surpass its previous record highs and could even reach an astounding $100,000 within a short period. Some speculate it may reach $1 million in 90 days, fueled by the investment activity of renowned investors. As the largest cryptocurrency by market capitalization, Bitcoin is considered a high-risk investment due to its volatility. Only investors with a high-risk tolerance, strong financial position, and the ability to afford potential losses should consider investing in Bitcoin. You can buy and store Bitcoins in digital wallets or consider ETFs that track their price. To profit from Bitcoins, you must sell them when their value rises. Additionally, you can earn interest by lending out your Bitcoins. Before making any investment decisions, it is crucial to check the current price of a reliable cryptocurrency exchange. Bonds. The next asset that offers money-making potential is bonds. Bonds represent a type of loan where investors lend money to companies or governments in exchange for repayment with interest in the future. For example, Madrid issues $1,000 bonds with a 5% annual interest rate valid for 10 years to fund a football stadium project. Investors receive a $50 coupon annually and get their $1,000 investment back after 10 years. While bonds are a compelling financial option, they carry some risk. There's a possibility that the issuer may not fulfill payment obligations or adhere to regulations. Credit rating agencies assign grades to bonds, from highest to lowest, AAA to D, to assess risk. Bonds are viewed as less risky than stocks, making them popular for diversifying an investment portfolio. They can also be bought through index funds or ETFs. Moving on to real estate, it remains a top choice for affluent individuals to generate and store wealth. Investing in residential or commercial properties offers potential appreciation in value and rental income, making it an attractive opportunity. However, managing and maintaining properties require careful consideration, and selling may take time. To increase returns, investors can identify undervalued properties, renovate, and rent or sell them for profit. Robert Kiyosaki, a renowned investor, favors real estate for its stable passive income and potential for value appreciation. Business. Another asset that has significant potential for generating wealth is starting your own business or partnering with others. It's not necessary to begin with a large venture, rather, it's crucial to think big and take small steps toward achieving your ambitious vision. Running a business demands substantial time and energy, making it a challenging responsibility that largely depends on your efforts to make it prosperous. A successful business requires a combination of passion, creativity, providing quality products or services, understanding market needs and trends, and a desire to serve others with your skills and talents. Properly managing the company's capital and reinvesting profits in its growth and other assets is essential. The possibilities for business ventures are vast, ranging from online businesses like food, electronic devices, and personalized articles trading to car maintenance companies, construction firms, software development, mobile applications, delivery services, real estate, and restaurants, among others. Digital assets. Money can now be generated through digital assets as technology advancements have made it easier to create and market products or services online. In the past, limited physical space restricted the audience size for seminars, but now, with the internet and modern platforms, seminars can reach a larger audience at a lower cost, making them accessible to thousands, if not millions, of people. For instance, an expert holding a 2-hour online programming seminar can earn much more than with a limited physical event. Online courses, ebooks, videos, images, and music can also be monetized by selling rights for third-party commercial use. These digital assets become a continuous source of income for their creators, even while they sleep. Financial education. Having a comprehensive understanding of personal finance through financial education is a powerful resource that cannot be taken away from an individual. Learning how money works is essential for making informed decisions and securing one's financial future. Financial education covers a wide range of topics, including money management, saving for unexpected expenses, investing in various assets, and creating additional income streams. It also involves managing debts, understanding credit cards, interest rates, and planning for retirement. Being well informed about taxes and available incentives is beneficial for making sound financial choices. Financial success requires investing in the right portfolio of assets, such as growth stocks, dividend stocks, index funds, mutual funds, cryptocurrencies, bonds, real estate properties, businesses, and digital assets. It's crucial to be aware that asset values can fluctuate due to factors like economic cycles, interest rates, policies, and government regulations. The joy of having assets that will make you earn money is unparalleled. These assets work for you, providing a steady stream of income and financial security. Whether it's through investments like stocks, real estate properties, or digital assets, they offer the potential for growth and passive income. So you better start learning how it would make you earn more money. If you want to learn more about personal finance and generational wealth building strategies, visit our channel and subscribe for more enlightening videos to increase your wealth.